What's up YouTube, it's Louis here. I hope you're all well. I'm back with another quant update. I hope you guys do enjoy today's update. If you're new around here, please do subscribe. We're on the road to 5k. Go check out my Twitter as well, Louis_crypto, where of course I keep you guys up to date once the video is over or before the video. So yesterday I had this, we've had this trend line since December, since December, since we were calling out for this head and shoulders pattern with a target down to 70. You can see if we flip the chart, we've created another head and shoulders pattern, this time going all the way down to here. But if we flip the chart, it's an inverse head and shoulder. We've been talking about it for a good few months on the channel. Leave a comment down below letting me know how long you've actually been here on the channel. Have you been on the channel since back here where we were getting the hate? But anyway, we are actually on our way to this technical target. I wanted to bring your attention to the head and shoulders neckline. Because it seems that we are getting this rejection from here. Let's go take a look at the daily time frame. We did wick after hitting exactly the 2.272 at $228, and it looks like today we're trying to go back under the 2 target, which means that we want to head back lower. Now, because we got a rejection here and it seems that today we're going lower, obviously for some hours now we've been going down. As yesterday we wicked, and then today is a red candle. So I'm now going to put this trend line on there. In yesterday's video update, if you haven't watched it, please go check it out. I spoke about this other quant chart, how we didn't need to adjust the line. On this chart, we had already tapped it, and so it was this chart that was actually the correct one. So I am going to be flicking back and forth between these two, because you guys need to realize that the targets and the prices are completely different. I don't know why. Just a few dollars. So here we're on 195 and we've met resistance at 233, but the other quant chart is 228 and we're currently at 198, so $3 above the other chart at the moment, 195, 198. So yeah, again, I didn't see anyone in the comments letting me know which chart I should be using. Let me know. I know more people use this, the regular Quant USD, but there is that other Quant Bitcoin one over here that goes back all the way until 2018. And this is good. This is a good chart to use. Why? Because we've actually got this 200 EMA, which is not on the other quant chart. It hasn't appeared yet. Why? Because this is only going back to last year. So this has all the data. And so for this to actually appear, this white line, 200 weeks needed to pass. And so as long as you're above this, technically quant is bullish. So on the weekly time frame, just being above this means you're in a weekly uptrend, which means that for months we should be going up. Another confirmation of this is staying above the 20 and the 55, which we are. And we spoke about this bullish cross yesterday on the channel, and where we would like to enter would be on this bullish cross. I'm not entering right now. I'm waiting for the weekly close. Don't expect this to stay the same. We've got 5 days and 10 hours. It's not going to stay like this. It might do, but we've got a lot of days and a lot of hours to go. So I wouldn't expect this to stay the same. You could be down here. You could be up there. No one knows. So we do have this resistance, so we know we're reacting from that. Now I want to see the confirmation of this newly formed uptrend on the weekly time frame, confirmed by this bullish cross. What's now going to happen is these bullish crosses are going to drag up as this takes time to come up, as this takes time coming down, these will drag up and you'll eventually come down and kiss it. I'm not going to give you an exact price, as every week that it takes for it to come down, this will move a little bit more. So for example, on the daily time frame, we were up here. I don't care about the price, but you can see the EMA was here, and if we dumped instantly in one day, then yeah, you'd come down to that level. But we know that's not what's going to happen. And you can see as price went sideways, the EMA's caught up. You didn't even kiss it, but you can see in and around that area the EMA landed, and as well as on a key resistance over here and a key support over here. So it was a level that had to be watched, and we saw the 20 basically catching up after the initial spike. You didn't actually continue down, you just went sideways, and as you went sideways, this caught up. So the same thing here, we could be going sideways and this catches up, and you just continue sideways and eventually continue up. This is on the daily, but going on the weekly, we can see the 20 and the 55. I'm actually going to tell you guys to keep an eye on the 12 EMA as well, because this is closer. You could actually be getting reactions off this. So this is another EMA to look out for. But yeah, other than that, there's not much more to say other than Quant is in a target to $400 back to the previous all-time high. Actually, there is one thing I wanted to show you. I'm going to get rid of this for now because you can see we've met the targets. We know what we need to do. We need to see Quant falling back to this bullish cross and confirming it as support, and only then really Quant is technically safe if we're holding that as support, because right now you're above it, it's amazing, right? But you can fall straight back under it, and that means that this bullish cross was fake. You'd form another bearish cross, and that would mean that you'd want to take out this low, and that's when we go lower, exactly like that. So that's still the risk, because again, we're still not above this neckline. We're above the 150 psychological level where we saw crazy pumps, correct, and dumps here as well. So now that we're above it, we want to see it hold as support to send us higher, exactly like that, to a new all-time high, for us to hit this invert head and shoulders pattern target. You can see it looks much clearer when you flip the chart upside down. You lost this key support. So I want to check this key support out with some Fibonacci's. Now it's obviously resistance because I flipped the chart back. But yeah, you look at it over here. When we hit this as resistance, look at the dump. So I'm interested in this area. This is where the dump began. So from the beginning of this dump to the bottom, and I'm putting on some new targets. You can see we've already run into this 1.272 at $231, lining up exactly. So this would be acting as confluence, telling us that this is a major key level of resistance, because there's two things lining up essentially. You can even see in the past, just a little bit below, there's psychological level, $225. You're rejecting that as well. Yeah, you could just put a line there. You can see some support where the 20 EMA was. You flipped it into resistance with the wicks there, closing below, and you're holding it as resistance with the wicks there as well. So this is a valid area of support and resistance. So that's why we're also, a third reason basically, on top of the head and shoulders and the Fibonacci's, have we met the first target out of the Fibonacci's. So because there's not only is the 1.272 here, but also the head and shoulders neckline, this is where we should actually anticipate a drop, even if you are bullish. We know we're going to here as long as we're above the neckline of this inverse head and shoulders. I'm going to make this purple so you can see it better. But if you're interested in learning all of this, I do provide education. Head over to my Twitter if you want to see some reviews. One of my students revealed, and he only joined in the last 3 months. He said he's already made $6,000 since he's joined. And yeah, there's many more students. If you want more information, just head over to my Twitter, Louis_crypto. I have a course and a mentorship over there. Just private message me. But going forward, even if you are bullish, you have to expect this reaction from here, because it's a key resistance. Just like when we were coming up to this head and shoulders neckline, you rejected it first to break it. So now we need to see if will it hold. You don't necessarily have to come all the way back down to this neckline. You may do. You don't have to, because we know that there's EMAs and those EMAs can hold. It will look like you're just finding support out of nowhere. But yeah, that's why we use the EMAs. We need to see that. Look, for example, this big wick without the EMAs there, the only thing telling you that there was some support is this previous resistance or this psychological level. But if you weren't too sure about those things, if you weren't aware of those things, then you wouldn't know why you found support there. This is why you need the EMAs essentially, because you can find support in random places. So yeah, that's pretty much it. We've got a 1618 target at $381. Again, like this video, subscribe so we can hit 5,000 subscribers, as well as commenting on this video. I really do appreciate every single comment. Check out the memberships if you do want to actually get access to these videos earlier. I do release them a bit earlier than when I actually do publish them. So yeah, thank you guys. I'll catch you in the next one. And as always, peace. I'll see you at $400 quant.